How do our elite prop traders enter and exit trades so accurately? They know the secrets to the very best entries and exits for each trade. And in this video, one of our most seasoned traders will walk you through numerous real-world examples showing you how he does it step by step. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and now Miami as well, and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from an S&B trader so you can grow your trading account.
Welcome to another bar by bar trade review. The market has been incredible lately, offering opportunities for every type of trader. It's a great market to learn and level up your trading. Today, I'll break down a Tesla breakout, a mean reversion short and second day trade in PLTR, and a small cap squeeze. So today, we really have something for everyone. Let's dive in. First trade that we're going to review today is Tesla from December 11th. Now, this is an interesting trade where we had to put some pieces of the puzzle together along with the overall market. First, let's quickly review Tesla. Tesla has been extremely strong since the election, put in a resistance level at 360, created this ascending triangle, which we could quickly draw here with this clear 360 resistance level, and it broke out. Since then, it's been grinding higher. Now, if we compare this to the Qs, we'll notice something pretty interesting leading up to the day of the trade on the 11th. On the right, you can see a picture of the QQQ. On December 9th, we had a pretty weak day where the Qs closed at the bottom 20% of its intraday range. You could also see that after this 3-day breakout and run-up, Tesla also pulled back. Now, this is where things get pretty interesting in my opinion. Following day, on December 10th, the Qs broke the prior day's low and closed fairly weak. Now, if we look at Tesla on the 10th, which is the day leading up to the trade, and we zoom in a little bit, we could see that Tesla had a strong opening drive off the open, pulled back into VWAP, leaked a little bit below, but ended up holding. 409 acted as resistance. Tesla was able to put in a new intraday high, while the NASDAQ, the QQQ, put in new intraday lows. Into the close, Qs continued to make new lows, while Tesla held up relatively well. You could see that Tesla was nowhere near breaking down below its intraday lows. We call that relative strength. That's one piece of the puzzle for this trade. The following day, we had CPI inflation data in the overall market, which was released at 8:30, and the market reacted positively to that inflation data. You can see at 8:30, we get a spike, and off the open, the Qs begin to trend higher. The idea behind this trade is that if the market reacts positively to CPI and we see strength coming into the overall market, a relatively strong name like Tesla could really break out given those market tailwinds, which it didn't have the prior day while the stock was relatively strong. Now that we got that bigger picture market aspect out of the way, let's talk a little bit more about the bigger picture on Tesla. So Tesla, clearly one of the strongest stocks in the overall market. And if we look at some of the moving averages on my charts, on the daily chart, I always look at the 5, 10, 20, 50, 100, and 200 SMA. Really strong stocks, when they tend to break out, they tend to surf along this 5 SMA. So as long as Tesla is holding above this 5 SMA, I want to look for reasons to get long, especially given the fact that on the December 11th, on the day of the trade, Tesla was opening up less than an ATR away from its all-time high. So if we look at a max weekly chart, you can see that the prior all-time high was 414.50. On the day of this trade where we had the positive reaction to CPI, Tesla's opening up less than an ATR away from that all-time high. If Tesla gets above that all-time high, we could really see some follow-through, which is what I was playing for, given the relative strength of prior day and given the positive reaction in the market. A few key levels that I was looking at going into the day of the trade, 405 resistance. So you can see on Monday, Tesla was gapping up, tested this 403, which I also have marked off the open, pushed up to 405, failed from 405. The following day, when it was relatively strong, pushed up to 405, failed. 405 acted as resistance in the afternoon, started to hold above, broke back down below, and you could see after hours, 405 acts as resistance again. Pre-market, the stock is able to then hold above 405. In addition, I was looking at the prior day's high, the day where Tesla was relatively strong in comparison to the overall market. And you could see this clear resistance level at 409. The final level that I was looking at was the 2-day VWAP from the prior day, which is sitting at 403. Let's get into the actual trade on December 11th. What I often talk about with new traders is when they have a good idea, it may take more than one try to get that idea right. A good practice when you're game planning in the morning is to set a certain amount of risk for your idea. And then you could break that risk up into multiple attempts. So you think you see a good entry, maybe you risk 50% of your allotted risk for that idea. Or you could break it down into 3 attempts. But more often than not, an idea is going to take a couple tries to get right, and this was no exception. In the morning, after CPI, Tesla puts in a high right around 412. 412 is the pre-market high following that CPI data. Off the open in Tesla, we get a very valid trade setup. We get a down through open where Tesla has a first move down. It's able to reclaim VWAP and breaks above the opening price. It then pushes to new highs on volume, and this is a great down through open, back through open trade setup. So as I see that, I don't want to miss the breakout idea. I notice that the Qs are trending higher off the open, and this could be the moment where Tesla pushes through 412, pushes above that 414.50 prior all-time high, and takes off. As I see Tesla reclaim VWAP, break above the opening price, and go green on the day, I get long. We push through 412, we break that pre-market high. I see that volume coming in, and it looks great. However, something unusual happens. Something happens that does not happen in the best down through open, back through open setups, where suddenly we're not able to push above that 412 pre-market high. And you could see that the stock starts to stall out. And if you're a great tape reader, you could see this pretty easily. The stock tries to get above 412, gets slammed right back down. Tries to get back above 412 again, gets slammed right back down. And I see the offers stacking up at 412. This is not what a great back through open opening drive looks like. So when I see that 412 acting as resistance, I want to begin to de-risk. I see that 412 acting as resistance, I cut 1/3 of the position. It drops 412, I cut another piece of that position, and it fails through VWAP. And I know that this isn't right. This isn't what a good back through open setup does. I'm not going to take that risk to low of day. Given the strength in the market, given the technical setup, given the higher time frame setup, this should just work, and it's not, so I'm going to take the loss. But that does not mean that I'm giving up on the idea. So Tesla then puts in a new low. That 405 starts to act as support, pushes up, can't quite get above this 21 EMA, comes down and tests 2-day VWAP, tries to push back up, sort of forming a lower high here. And then this is where things get interesting. We get one more test of that 2-day VWAP area. And we can look at 2-day VWAP is where the average buyer and seller are from the prior day. And it immediately wicks down to 403 and rebids 405. So now I'm starting to get some confirmation that my potential support level at 405 is being validated. We had the test, it bounced off, it broke back below. We got the wick into 2-day VWAP, we reclaimed 405, and then suddenly we're able to finally break above these EMAs and some volume comes in. Tesla is breaking its downtrend from the open at this point. Breaks the trend, wicks back into 2-day VWAP, immediately rebids, and we're starting to push higher. All the while, the Qs are trending higher. We're rebidding 405. 405 is my line in the sand today. As long as Tesla is holding above 405, I want to be leaning long. Immediately see it, try to trade back into 405, it rebids, and it starts to consolidate right under VWAP. And this is where I get long, half a position. My risk is to low of day. Following this trade, Tesla begins to grind higher. It goes back green on the day. You can see that opening price acts as resistance here around 1017. Acts as resistance. We break above that opening price on volume. We're sort of in this slow grind, and I'm getting some confirmation that I'm right. We'll zoom out a little bit and we'll go from a 1-minute chart to a 2-minute chart. Typically after the first hour, first half hour, I'll switch from a 1 and a 2-minute chart to a 2 and a 5-minute chart. And that's what I'm making decisions off of intraday. Zooming out a little bit, from a 1 to a 2-minute, we see this grind higher. Then Tesla pulls back to that 409. So remember that 409 was the prior day's high and resistance area. Could not get above that 409 for about 2 hours. We're getting our first test of the 21 EMA since that uptrend started. And prior resistance turns into support. And as soon as we start to push off of that 409 and I see the strength in the overall market, I don't even wait for the break of highs. This is an excellent add, and I get into the remainder of my position. Following this trade, I want to be patient. This isn't a momentum trade. This is a trade to hold. The overall market is strong. We had positive macro data. Tesla is one of the strongest stocks in the market. We saw the relative strength that it had the day before while the market was extremely weak. This is a trade that I think could break out of all-time highs and continue higher. So I want to be patient and wait for that. So Tesla consolidating over our opening range high, acting perfect, absolutely nothing wrong with it. We push above that prior all-time high at 414.50, and it starts to fail a little bit, and you can see that elevated volume there. Because of that, I just want to play it a bit safe, so I lock in 20% of my position. I was expecting Tesla to get above that prior all-time high and explode. I wanted to see an explosive move, and we were not getting that. I lock in 20% of my position. This way, I ease my mind a bit, knowing that I've locked something in, and I could continue to be patient with it. Tesla holds really well above VWAP, just sort of holding, consolidating, and we start to really tighten up back at that prior all-time high, and we sort of just break to new highs out of this tight consolidation. I'm continuing to be patient with the trade. We're now able to hold at all-time highs. Something that will help a bit with these trades to hold that aren't momentum trades is to zoom out. Don't get so wrapped up in the 1 or 2-minute chart. Zoom out, clean up the chart with a 5-minute. When we look at the 5-minute, we can see that Tesla just wicked that all-time high. I took 20% of my position off there, locked something in, and you could see the 21 EMA acts as support. Continues to act as support as we break that all-time high. Tesla pulls back to the 21 EMA and holds again. Strong trending stocks tend to do an excellent job holding this 21 EMA. It acts as a great line in the sand. Prior all-time high, prior intraday resistance, then acts as support, and we could highlight that. The trade is working perfectly. Now at 420, 420 acts as a little bit resistance. Anyone who's been around trading since 2020 remembers that tweet where Elon said he would take Tesla private at 420. Just to be safe with this, I lock in an additional 30% of my position, leaving me with half a position into the close. Tesla closes strong, I take off another 20%, which leaves me with 30% of my position, a nice profit locked in, and now I have a swing trade for a continuation higher from excellent prices. Next, we're going to jump into the mean reversion short on PLTR. This is from December 9th. Going into this trade, there was news in the morning that caused PLTR to gap up. PLTR was awarded a 1-year, $37 million expansion of its contract with U.S. Special Operations. It caused the stock to gap up 8% in the morning. In addition, PLTR doubled over the last month. With this gap, PLTR was now trading above 4 ATRs from a 5-day low. 4 to 5 ATRs from a 5-day low is generally the sweet spot for these large cap stocks that we want to start to look for a mean reversion short. That's one of the ways that we could quantify an overextension in mid to large cap stocks. That's what this band represents here, 4 ATRs from a 5-day low. In addition, another way we could quantify an overextension is by looking at Bollinger Bands. You could see that PLTR broke above its upper Bollinger Band the prior day, and now we're gapping way above that upper Bollinger Band. Another way to quantify an overextension. Finally, bigger picture-wise, PLTR was grinding along its 5-day simple moving average. Strong mid to mega cap stocks tend to trend along their 5 SMA, and it's not till they start to extend away from that 5 SMA that we should be looking for a mean reversion. So if you ever see a strong mega cap to large cap stock just grinding along this 5 SMA, do not look for a short until it starts to get extended away from that 5 SMA. We've seen that commonality in all of the best mean reversion plays. We saw that in NVIDIA. We saw that in SMCI. We've most recently seen that in MSTR. It's not until they start to gap away from this 5 SMA that the stock tends to mean revert. So just a few ways to quantify our overextension criteria in mid to large cap stocks. And if we zoom in a little bit, we could see this gap on this positive news of the contract. Typically, when a stock is overextended to the upside and positive news is released, that tends to be a sell the news event. So if a stock is ever overextended to the upside and positive news is released, you should be thinking sell the news. It is a high probability trade. In the morning, coming into the day, first thing that really sticks out to me is this 80-50 pre-market support area. You can see the gap breaks above that level, VWAP acts as support, VWAP acts as support, 80-60, 80-50 acts as support, and into the open, we're holding that level. Off the open, we get a first move down through that 80-60 level, and the volume here is just astronomical. You can see that the bar threshold that I have here is showing 1 million shares. What this bar threshold data looks at is the last 10 days worth of 1-minute bars. It takes the average volume and then 3 standard deviations from that average. So 3 standard deviations from that average is 1 million, and we're seeing a 4 million share volume bar to the downside off the open. If we go back and look at the last few days, we don't see anything close to that on the 1-minute chart. So I'm getting volume confirmation for my idea, and now we need to pair that with a trade setup. PLTR is sort of just consolidating at lows. And then something interesting happens. We get a push up into VWAP and we get a hard failure. This push into VWAP and wick above VWAP wicks into that pre-market support we discussed and that opening price. So we're getting a failure from three very clean levels. We're getting a failure from pre-market support turning into resistance. We're getting a failure from the opening price. The stock is trying to go green on the day and can't. And then we're getting our failure back through VWAP. And this is an excellent risk reward spot to enter into your short. So we take our first entry on that failure, and your risk is just a few cents above the high of that recent high above VWAP. So you can see 850 is the high of this candle. Put my stop just a few cents above that. We get volume confirmation on the breakthrough low of day. We're getting a nice opening range break to the downside after this failure from VWAP. Clean VWAP continuation into an opening range break to the downside. So I'm building into my position the more checks in favor or the more confirmation that I have. In addition, we have the tailwinds at our back from the overall market. So if we pull up the QQQ, we could see the Qs struggling to get above VWAP and starts to hold below VWAP. So a little bit of a double top in the overall market. And then something interesting happens. If you like to read tape, I would highly suggest going back and rewatching this, whether you do that through TraderView or TraderSim. This 79 level, I'm watching the stock pop up to 79. I can zoom out a little bit to a 2-minute at this point. Can't get above 79. Can't get above 79. And that goes on for almost 15 minutes. Tries to push above 79 and it can't. It just cannot get back above 79. You could see that there was a buyer at that 79 in the morning, and now that buyer has turned into a seller. And you can see that very clear on the level 2. Start to fail from 79, and I'm thinking, if I'm going to add anywhere, it'll be on this failure, and if we break down to new lows. Those are going to be my best chances to add to this trade and get bigger in this mean reversion short idea. We get the failure from 79, I add to my short. We get a break to the downside and a new low and volume on that new low. And this is the final add. Each one of my adds has a different stop. So the short at 79, if that starts to hold back above VWAP, I'm getting out of that trade. The VWAP continuation short, if it breaks above 80.50, I'm covering that short. The breakdown to new lows, if we're able to reclaim that prior low and break back above this breakdown bar, I'm out of that add. Following the breakdown, we start to grind lower. Now PLTR breaks below its prior close, and we have a first red day scenario. After a series of green days into an overextension, we have a first red day. The stock wicks into that 9 EMA, wicks back above the prior close, and immediately stuffs. This is an excellent sign that the weakness and move should continue. And then we get some nice momentum here into 2-day VWAP. And we're starting to extend away now from that 9 EMA. You can see all morning, the 9 EMA acted as resistance, tried to get above that 79, which we discussed, tried to get above the 9 EMA and could not. 9 EMA acts as resistance. Really weak stocks with heavy volume behind them tend to hold under the 9 EMA. It acts as a great guardrail and it's extremely helpful. So at this point, on the flush of the prior day's close into 2-day VWAP, we're finally starting to get extended from that 9 EMA, and we're starting to see some heavy volume come in into that overextension. In addition, PLTR is 1 ATR from high of day. Given the ATR from high of day and given the momentum and volume coming in, I want to lock in half of my profits on this position into that momentum. You could also see that around the same time, the Qs have an opening range break to the downside, and we have the overall tailwinds at our back from the overall market. This is extremely helpful for our trade. It is an added check in favor, and it should give you some extra confidence for this mean reversion short. Then you can see the 74 level. It starts to hold, it starts to hold, it starts to hold. PLTR puts in a new low, and it's starting to have some trouble breaking down through 74. And I cover an additional piece of my position, leaving me with 20% of the position. PLTR continues to trend lower. Now we're at about 2 ATRs from high of day. We start to reclaim, hold back above the 9 EMA. And you can also see that since that breakdown, PLTR starting to break its downtrend from the breakdown. And I cover the remaining 20% of my position. Now, this brings us into day 2 of the trade, the second day setup. So PLTR closes at the bottom 20% of its intraday range. It closes extremely weak. Now, going into day 2, I want to look to short pops into prior resistance, prior key levels. These are some of my favorite second day trades. These are some of my highest conviction second day trades where I have confirmation that the stock put in a short-term top, given the move, the volume, and the close on lows. Given those 3 metrics, I don't want to be chasing weakness on day 2. I want to look for pops into prior day's levels that fails, and that's going to offer me the best risk reward. I don't want to chase weakness unless it's an extremely clear breakdown through support. I want to look for turns off of prior levels. Off the open, PLTR holds this 7170 support area, pushes off, and we get this opening drive higher. And this is just another great example of how a good trade idea may take you 1, 2, 3 times to get right. And again, allocating risk to the overall idea and then breaking that risk down into multiple attempts is extremely helpful. Knowing that it might take more than one try to get the idea right. And this is something that happened again on this trade. We get the failure, starts to break that uptrend, and I start to take a short. You could also see that PLTR was failing from its pre-market high. We have almost a 1 ATR extension from the lows. Starts to break that trend. I noticed the hold on the 9 EMA. It starts to push up towards highs, and I'm taking a small scratch on that short. I'm patient with it. Next level to look at is 2-day VWAP at 75. So we could look at that level as where the average buyer and seller are from the previous day. It's where the VWAP flattens out into the close. Essentially, PLTR is forming a wedge above VWAP, so we want to be cautious with that. So you can see that wedge there. It's doing a pretty good job holding above our EMAs, so I want to be cautious. I don't want to exhaust myself on this idea before we get more confirmation. We get the breakout on volume. In addition, I'm sure there are a lot of shorts with the same idea as me getting squeezed here, and you can see that in the volume as PLTR puts in a new intraday high. The stock then gets above its 2-day VWAP at 75. And then we get this failure back through 75. And this is where I make a second attempt at the short versus a few cents above high of day. I'm being patient with the trade. We're failing from a key resistance area. We had a very weak close the prior day. And again, if we take a look at the Qs, we're starting to get the tailwinds in our favor from this trade. You can see that the Qs put in a new high, start to fail back below that prior high. We're starting to see a trend lower in the overall market as well on that failure from 75. Now I'm being patient with the trade, and I'm aware that PLTR doesn't need to fail through VWAP right away. What could also happen is PLTR puts in another lower high before it starts to roll over. We get a retest of 75, and we start to get a failure from 75. You can see 75 acts as very clear resistance here, sort of like what happened at our 79 level the prior day. This is a bigger picture idea. I'm willing to let it work. Start to fail from 75, and I'm adding to my short. We start to get momentum through VWAP, and anytime I'm taking a mean reversion short and the stock is above VWAP, I like to cover and lock in profits on flushes of VWAP. Flushes through VWAP, I'm starting to take some profits. You could also see this prior intraday support area. 73.80 level held. We're flushing back into that 73.80. I'm going to take some profits on my position. We start to push lower. At this time, if we just zoom into the Qs are starting to put in a new intraday low, which gives me confidence to start leaning into this PLTR trade on pops. So I have a nice core position from around $75. So I have an excellent position, but I want to take advantage of the volatility in PLTR. And I want to put on cash flow trades and momentum trades. We're starting to break below VWAP, and as PLTR pushes into that 21 EMA and fails, keep it simple. You just draw this really simple trend line, a little bit of a wedge. First pop into the 21 since the failure from VWAP, and we fail. And I'm just simply putting on a momentum scalp just to generate some cash flow. We get some clean momentum to the downside, and I'm covering that scalp short, just generating some cash flow while I trade around my core. We start to pop into VWAP, and as we are approaching VWAP, I enter in a short position. We pop a little bit above VWAP, and I'm adding to my short. If PLTR starts to reclaim VWAP and hold back above VWAP and starts pushing above that 74.50, I know I'm likely wrong if it gets back above this resistance area at 74.50. So I want to be able to give this trade a little bit of wiggle room. So I'm not oversizing into this move into VWAP. I'm putting on a comfortable size where if it kind of just hangs out around VWAP for a while, I'm not going to worry about that. If there is momentum off of VWAP through 74.50, that's where I'm accepting the risk to. If you oversize into this move through VWAP, you're not going to be able to handle a move like this, which ends up failing. PLTR starts to fail from VWAP, and I'm adding to my short. It's a bigger picture idea. Given the overall market weakness, I want to give this a little bit more wiggle room because I feel like it could follow through to the downside. Something interesting happens here. PLTR breaks above this prior high above VWAP, and you can see that volume that comes in there. This sort of tells me that there are shorts that are just getting wicked out above this prior high. And then as that move gets stuffed right back down, this is my final add for this short. And as we begin to hold below VWAP again, this short campaign from VWAP now has a full stop just above this recent high. I really liked that it was able to shake out the weak shorts and immediately get stuffed, and you can see that volume that comes in there. Gives us a little bit of confirmation that that's what's actually happening. From there, we get a really nice, clean momentum move lower into low of day. And anytime I'm taking a trade like this, as we extend from that 9 EMA and that volume comes in, I'm slowly piecing out of my short into momentum. What that looks like is, okay, we're getting failure from VWAP. It's holding, it's catching up to the 9 EMA, and we're starting to extend away from that 9 EMA. And what I'll do is I'll just throw out bids to cover every 20 or so cents worth of like 20% of my total position. So I'm covering into that momentum. We put in a new low and start to reclaim, and I'm covering more of my short while keeping a core position from these prices, these higher prices. So I'm trading around this bigger picture idea. So the final trade, PLTR is then able to consolidate at low of day. We have this really clean consolidation at low of day, and this tells me that price is being now accepted at lows. We have price acceptance at lows, and PLTR is clearly weak. So again, I'm starting to build into another short position. After our steep down move, we get a first test of that 21 EMA. We start to turn off of that 21 EMA, and I start to add to my short. Pop back into the 21 EMA and fail, and I'm adding to my short. Anytime, like I said, anytime after 10:30, I switch from a 1 minute and a 2 minute to a 2 minute and a 5 minute. And what I notice on the 5 minute is we're getting that first push into the 21 EMA. We start to fail, and again, I'm adding to my short, and I'm covering into that momentum to the downside. I did fully expect PLTR to continue rolling over into the close, so I did not like when it was able to reclaim the pre-market low in the 7150 area. So we could quickly highlight that. I expected momentum and a clean trend lower, given it's the last hour of the day, and PLTR was able to reclaim that low, and that is where I covered my position. So again, given the bigger picture idea here, I'm willing to give my trades a little bit more room in order to let them play out. Just give the trade a little bit more wiggle room. Finally, for all my small cap traders out there, we're going to go over UMAC, which I think was a very interesting short squeeze play. Given one of the unique factors that it was the day after Thanksgiving, and it was a half a day in the market where the market closed at 1 p.m. And we'll talk about why that's interesting and such a big influencing factor for this trade. So UMAC, 6 million share float, 12% short interest. You can see on Wednesday, which was the day before Thanksgiving, it had a nice squeeze higher on high volume, rotated its float about 10 times intraday. The market was closed the next day, and it reopened on Friday, the 29th, for a half a day. This was number one on small cap gappers, and given that it was a half a day, this was one of the top watches for the day. Knowing that it's a half a day, so volume is going to be lighter in the overall market, we're not going to have as much participants. Less participants, less volume makes a stock more likely to squeeze. Tape's a little bit thinner. Off the open, really not interested in it as it breaks above the pre-market high and fails from 15. And then we get a double top at 15. You can see the stock puts in a new high and fails hard. It then holds under VWAP. So in my opinion, there are a lot of small cap traders out there that simply say to themselves, this stock is just up too much over the last 3 days. And I tend to agree with that. It's day 3 of the move, and it's overextended. Given the volume this is doing on this half day, and given the fact that there's less time for shorts to exit their position if they're oversized, given the fact that the market closes at 1 o'clock instead of 4 o'clock, this could be a recipe for a short squeeze if UMAC reclaims VWAP. Pretty unique setup here. You can see volume really thins out. UMAC trades to new lows, new intraday lows, but it's able to reclaim VWAP. Then something interesting happens. We reclaim VWAP and we start to hold VWAP. VWAP becomes support. Given that the market closes at 1 o'clock, shorts have less time to cover their positions, especially if they're wrong. The stock holds VWAP and then begins to curl off of VWAP, and we start to see some volume come back into the stock. This is what I like to call a curl. You get a series of green bars, green bar, green bar, green bar. It's curling off of VWAP. after VWAP proves to us it acts as support, after it fails to break down through low of day, I'm starting to think that there are some shorts that are in trouble here. I see that volume come in through 15 and I'm getting long. Now, this is a trade idea where I want to keep my stop tight, just a few cents below the breakout bar. So the low of this bar is 14.45. Set my stop just a few cents below that. If this stock stuffs 15 again, I do not want to be involved. So this is a trade where we could keep our risk pretty tight. We see that volume come back in over 15, and it begins to squeeze into a limit up. The stock on halts, and we get this push higher, and I'm selling into that. Don't want to be greedy with this. I want to take my profits. The trade worked exactly as I planned. Shorts are trapped, and they're getting squeezed. Limit up. We open higher out of that limit up, and then push up, and I'm selling into this. Now, this is where things get pretty interesting. From studying these squeeze plays, what I tend to notice is if they're going to have a second leg up, they'll do a great job holding that 9 EMA. So as we push back into that 9 EMA and start to hold it and push off, I'm adding to my long position. And the stop just goes below this higher low. We trade to new highs, and as we break new highs, I don't want to be the one chasing these new highs. I want to be the one selling into the strength. So I start to sell into the strength. As we get this blow off top and this hard failure, I start to sell more of the position, giving me a remaining 10% of the position. I'm stopped out of that 10% as we begin to hold below the 21 EMA. We also break that uptrend from the breakout. Thank you for tuning in to another bar by bar video. If you found this video helpful, please subscribe to our YouTube channel for more. In addition, check out the link below in the description for inside access. Every Wednesday during my office hours meeting, I go over trades bar by bar and I talk about the nuances like we've done in this video. If you're interested, take a look.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.